Good morning, everyone. My name is Brandon Garner. I am the sales manager with Superior Trucking Payroll Service, and I'd like to say thank you for attending today's webinar. Very excited about today's webinar. It's one of our most popular. It's on Per Diem best practices. It's a lot of great content in here. It's going to help to save your trucking company money. It's going to help to save your drivers money. And ultimately, it's going to help with driver retention and recruiting for those great drivers. Some quick housekeeping notes. All of the lines have been muted for today's webinar. If you do have a question as we go through, please feel free to place that question in the question box. We will address those at the end of the webinar with a little Q&A. Quick note on that, we will address the questions as they come in, so kind of a first come, first serve questions. You can close the webinar box if you'd like by clicking on the double arrow second to the right, but do not click on the X, however, because that will exit you from the webinar. So let me look at this here. I'd like to say I'm very excited today, and I want to say thank you to our sponsor, Ascend TMS, for today's webinar on Per Diem. They are the world's #1 rated TMS software, as ranked by Crowd Reviews, Capterra, and Software Advice. Begin using Ascend TMS 12 seconds from now and start booking loads in 60 seconds. There's no need to schedule a demo with Ascend TMS. It's the easiest to use TMS software on the planet. And if you need it, unlimited training is totally free forever. Your team will simply love the experience. And some quick notes about Superior Trucking Payroll Service and what we do. We're a full-service payroll administrator for trucking companies. Our payroll platform was specifically designed for the trucking industry, but also it's completely in-house. And what does that mean? What does that benefit and mean to you? Well, we can customize our payroll module to meet your specific trucking company needs and wants. Services listed below, things like direct deposits, garnishments, tax calculations, year-end W-2s and 1099s, are all built into our payroll fee. So there'll never be any additional charges for those. And we also have an excellent applicant tracking software and HRIS system. We know trucking, and we're here to help trucking families. Quick note about our speaker today. Mike Rissima is the founder and president of Superior Trucking Payroll Service. He is former CFO for trucking fleet brokerage here in Michigan. He has 20 years of payroll experience and 10 years of trucking experience. He is going to be an absolute expert when it comes to Per Diem, the legality of Per Diem, and how to apply Per Diem. And with that, I will go ahead and send it over to Mike.
Thank you, Brandon. Yeah, we're excited to have everybody here today, and we're excited about Ascend, and there's going to be an announcement at the end of the webinar, something that Ascend will offer for you. But let's talk about the webinar today. It's Per Diem and all the great things about Per Diem that a lot of trucking companies don't know about, and the great opportunities in Per Diem that trucking companies just don't take advantage of for whatever reason. So what we're going to talk about today is how Per Diem changed with the tax law changes in 2018. We're going to talk about the benefits of paying Per Diem financially, actual dollars savings. We're going to talk about the other benefits, which may be as big as the dollar savings, but not quite as direct, and that's improving driver recruiting and retention. We are going to talk about when not to pay Per Diem. There are times when you want to not pay Per Diem to a driver, and we're going to talk about making legally the most advantage optimizing Per Diem, and then questions and answers. And as Brandon said, type your questions in anytime. We probably won't get to them until the end. However, we will get to them. And even if we didn't answer them in the webinar because we ran out of time because you had so many questions, which would be awesome, we'll get back to you after the webinar with them because we want to answer your questions. Well, let's start with 2018. If we all remember pre-COVID, many years ago, we had the big tax law changes, And I highlighted some of them there on the bottom. It was HR1, not that that really matters, but you know, remember we got rid of the higher standard deduction, and we got the lower tax rates and all that stuff. But one of the things that they talked about, and you might have seen this in a lot of articles that were written, was about how per diem went away. Well, did per diem really go away? It did and it didn't. It only went away in a very specific case, and that was a W-2 driver working for a trucking company who used to not get paid per diem by the trucking company, but would write it off on their personal taxes on their 1040 return. And what they would do is they would fill out Form 2106 for unreimbursed employee expenses, and then they could deduct that if they itemized, and it was subject to what's called a 2% floor, which is 2% of your adjusted gross income, and that would be you and your spouse if you're filing jointly. So if you and your spouse both worked and you each made 50 grand, the first $2,000 of per diem wasn't deductible. It also generally wasn't deductible for the states. That was the old way of doing it. But so that part went away, that the W-2 drivers can't do that anymore. But the motor carriers and the owner operators, if you're just one person in a truck, right? You can still totally deduct it on your Schedule C as a self-employed or as a corporation or partnership, however you're set up. If you're paying drivers, you can still pay per diem. That didn't change. It was unfortunate that I think some people just saw that per diem went away as a unreimbursed employee expense and thought it was just gone, but it wasn't. I was actually had the uh, honor of being quoted in Transport Topics about it when the whole tax law thing came out right at the beginning of 2018. And yeah, it's per diem is still there, and it's still common, and it's still a great idea for you. The link that I've got here is just the revenue procedure. If you can't sleep at night, you can start reading that about meals and incidentals and about trucking and all that kind of fun stuff. It's from 2011, but they always refer back to that one every year when they set the new rates, and they set them a couple of weeks ago for the next, basically for the next year, for the next government year, which was October 1st to September 30, that we're 13 days into, and the rate is still $66 a day. Trucking companies can pay the driver $66 a day for all the days they're out for meals and incidentals while they're on the road. That does not include hotel. If you put your driver up in a hotel overnight, that is separate. This is lunch and a toothbrush, 66 bucks a day. So what we suggest to people, to our clients and to anyone who will listen, is that you pay that as a substitute for wage. Basically what I'm saying is, if the driver, we'll just make it one day, if the driver made $200 today, instead of paying him $200 in wage, pay him $134 in wage and $66 in per diem, which adds up to $200. So they're getting the same amount of money from you. The difference is there's some significant savings for you and for the driver for doing that. And that's what we're going to go into here next. We're going to walk through an example, and I put right up at the top that per diem is not 100% deductible for income tax purposes. What that means is per diem is only 80% deductible for income tax, but we're going to account for that. So the 20% that's not deductible, you're going to pay income tax on that. And I'm going to show it to you, but it's still such a big win for the trucking company. We made up a theoretical driver here, and I made some assumptions about your company. Anybody who wants to contact us with their actual numbers, I'll run it for you. We'll get you your exact numbers. I've got to make some broad assumptions here, so hopefully you can interpret from this. We used an 8% work comp rate for drivers. Some are higher, some are lower. Depends on where you are, quite honestly, what state you're in and your claims experience, but $8 a hundred is what the insurance people would call it. The rest of us who do regular math call it 8%. We used a 21% marginal income tax rate for your business. That was part of the tax law changes from a couple of years ago. And we're boiling it down to, you've got one driver who's out for 1 week. They drove 2,400 miles exactly. They got 42 cents a mile, and they were gone for 5 days. Again, fairly straightforward as far as the driver goes. And the rest of it, again, if you've got different work comp rate that you want us to help you with, or you think your marginal tax rate is higher or lower, send it to us and we'll walk through the math with you. But we won't do it in front of everybody. That'll be just between us. So here's what it looks like, and there is a lot of information on this slide, and I just don't have a better way to present it. But if you kind of work with me on this here, the gross wage is the same, right? That is the same, right up here, 1050 and 1050. And then we have the one that pays per diem and the one that doesn't. Okay, so what happens is if you pay per diem, you have a tax deductible. Okay, let me do it the other way. If you don't pay per diem, this is all straightforward, 1,050 all the way down, no savings. Okay, but if you pay per diem, now you've got a tax deductible wage of $720. And then you've got the deductible per diem of 264, which is 80% of that 330. And again, I know that this might be kind of forgive my bad telestrating. I'm not John Madden. It's 80% of that 330 is that 264 is deductible, which means that $66 of the per diem that you pay is not deductible for the purpose of calculating income tax. What that $66 at 21% is $13.86. That's extra tax you're going to owe. And that's the bad news, but there's way more good news coming. Okay, now you've got the payroll tax savings of 7.65%. That's Social Security and Medicare of that $330 because you're not going to have to pay that now. So you just saved $25.25 in Social Security and Medicare. And we didn't figure in federal or state unemployment because for most states, you're going to max that out anyway. Some states have higher state unemployment wage limits, but it's pennies and it's not significant enough to worry about in this. But you'd save even just a little bit more, I guess is the point. And then we've got your work comp savings. And again, that's going to be 8% as we put in the example of that $330 again, because you're not going to have to pay workers' comp on the per diem, which is really the best part of the savings, especially when work comp used to be a lot higher. Up here in Michigan, work comp a few years ago, new companies were coming in at 15, 16%, and now it's been down to 8, thankfully. But still, even at 8% times $330 again, that's $26.40 that you're going to save in workers' comp savings just with that one driver in that 1 week. So when you net out those three numbers, the extra $13.86 in income tax, and then the savings of $25.25 and $26.40 for payroll tax savings and work comp, you're going to save $37.79, and that is per driver, and that is per week. So you can all do the math from there. If you follow me this far, and again, I hope that this makes sense. If not, we'll go through it with people as many times as we need to. That is significant. That is $1,965 and I think 8 cents is the math I did before per driver per year at 52 weeks. Almost $2,000 in free money for you. None of us turn that down. If you have 25 drivers, which is just a number that I pulled out, it's a pretty reasonable number to have. Some of you are going to have more, some are going to have less, of course. That's $49,127 in savings per year. And that's not FTE savings. That's not any of that kind of stuff. That is actual money you're going to pay less in taxes and insurance in the year. Money goes into the owner's pocket if it wants to, or goes to pay off a truck, or, there's always places to put money in trucking. So, that's huge. I put a link there for truckingpayroll.com/per diem savings. It's a little utility that I built. It just goes into just the work comp savings. It doesn't add the payroll tax savings, but it'll give you an idea. You can go right there and you can do your own math. It just asks you how many drivers, how many days per diem, what your work comp rate is, and it'll do it all for you and show it to you. And if you don't want to do that, reach out to Brandon or me and give us your information and we'll tell you what you could save. It's enough money that it's worth looking into. Again, 25 trucks, almost 50 grand a year. It's a lot of money. So that's great for the trucking company. We're all excited, 50 grand, right? We're fired up. We got to talk about the driver now. Here's that same drivers, that the rate times the miles is still the 1,050. And again, we did per diem on the one column and we didn't on the other. As you can see in the FICA column, there's a big difference because you're only paying Social Security and Medicare on the taxable wage. So that's much less. And the two columns below it, I used Michigan's income tax rates. If you're in Tennessee or Texas or Florida, Nevada, a few other states, you're not going to have state income tax, but I used Michigan. Some states are more. So you've got the federal income tax savings there too, which again, that's with the new rates from a couple of years ago. And then with the state, you've got savings as well, another $14 a week. Again, these are weekly payroll ideas. Ultimately, you get down to these bottom two, $916.34 in the one check and $831.85 if you choose not to pay per diem. That's $84.49 different. It's a little over $4 grand a year, about $4,200 a year. That's the biggest raise your driver is going to get. In 84 bucks a week, right? That's significant. That's like 3 cents a mile, a little more than that. So, I mean, that's huge. You can show your driver, look, we care about you and we want you to have as much money as you can get. $84.49 a week by paying per diem at $66 a day. Again, your mileage may vary in this with which state you're in and what your person claims for federal income tax. No, that there's always movement in there. And I didn't account for anything like Section 125 health insurance or things like that. I've kind of put that over and above the gross. So everybody moves around a little bit, but this is a pretty good working model here. And again, if you have something that you want to know specifically about how you pay somebody, let us know and we'll walk you through it. We're happy to show you how that works and how you can save your drivers money. Remember this slide as we get to the end, because I'm going to come back to it and a way that you can help explain per diem to your drivers. Now let's talk about the other parts, the benefits of paying per diem. It's driver recruiting and retention. We asked everybody when they registered for the webinar, hey, you looking to hire drivers by the end of the year? And of the companies that are trucking companies, because we gave you an option of not being a trucking company, over 90% said yes, they're looking to hire more drivers. I think that we see it in all the articles everywhere. I think we all see, the rates are finally coming up, and so the demand is coming up, and Christmas is coming, and so there's going to be additional demand to get into retail or Amazon or whatever. Right? There's all this the pent-up demand that's coming, and it's going to need to get moved on a truck, and we're going to need drivers to do it. And the rates are going to be good enough that we really want to find it. So this is a great recruiting and retention tool. If you are paying per diem or going to pay per diem after we've convinced you it's a good idea, that should be right in your driver's wanted page on your website. When you list your benefits, people list health insurance and dental, and those are all good benefits, or retirement plan, which is like the most underrated benefit there is. But this per diem, you actually save money, and you should be listing it in there. That's going to matter to some drivers. It's just say, hey, we pay per diem. We try to minimize your tax bill. And they'll be like, yeah, these guys are for us. You can walk through and explain how it gets them more money now. That's the previous slide. You can walk them through it and say, hey, look, you can have a check of $830. You can have a check of $915. What do you want? That's a pretty easy way to explain it. And it just shows the driver that you care about their financial well-being, that you want them to have as much money as possible. And that's gonna matter. Drivers don't generally leave over money, but when they're looking for a new job, that's when money's gonna matter. And so you're showing them we're gonna put as much in your pocket as we can. And I think that's significant. And retention, it works the same way. You're showing them how you're going to bat for them. Anecdotally and non-scientifically, I've talked to a number of truck drivers. None of them I've met want to pay more taxes. So I think this is a great way to show them, hey, we're on your side. We don't want you paying any more taxes either. Your trucking companies pay enough taxes with all the road taxes and tolls and all that fun stuff. Another advantage is less advances. If you're giving your driver an extra 80 bucks a week, you should have to advance them less often or less amounts. I know a lot of drivers are into a bad financial habit of always getting advances, but you could use this as a tool to cut your advance amount. Say, you know what? We were only giving you 200 bucks a week before. Now we're only going to give you 100. We're cutting it down because we're paying you an extra $84 in your check, and eventually wean them away from getting advances every week. We all know who those drivers are. As far as we all know the people that work for us that have those advance issues, you're actually doing them a favor by advancing them less. It's a little bit of tough love, but I know you can do it. And it'll make your accounting people like you a lot more. Not that they don't like you now, but they'll like you even more. They don't have to deal with trying to reconcile all the advances as someone who's done that. And better morale. You know, you're showing that, again, you're showing the driver you're on the same team as they are. Too many trucking companies have an adversarial relationship between the trucking management and the drivers, and hopefully none of them are in this webinar. But you know, show the drivers you're there for them. The drivers they'll appreciate that. You know, it's a win for everybody except for the IRS and your work comp agent. There are a few downsides to this. One of them is I put on their drivers that are deducting from the 1040s now can't. I leave that on the page, but they can't deduct it anyway, so you're fine there. The main one is if you have a work comp claim and the driver gets lost wages, it's going to be net of per diem. You know, that's not the end of the world. Hopefully you don't have work comp claims anyway, but I just want to make you aware of that. And then your payroll service or your internal payroll people need to understand how to do this. Clearly we can do that for you, but if you've got other people that you use, they've got to understand what you're doing. One of the problems that we've seen with other places is they'll deduct the per diem from the driver and then not pay it back, and then your drivers all get shorted $300 in their check, and they're not happy. It's a lot of angry Friday morning phone calls that we hope to avoid. We're going to talk about when not to pay per diem. The big thing is in the biggest type there, when the driver doesn't want it. I don't know if any of you have noticed, but it's hard to convince anybody of anything right now. 2020 has incurred its wrath upon us, and we can't agree on a lot of things. And so it's not impossible for a driver to dig in and say, you know what, this is per diem's bad for me because of this or that or the other thing. And the reason doesn't matter. If they're married to this thing that they don't want per diem, I would never lose a good driver over per diem. I would just say, okay, we're going to opt you out of it, and you'll have no days per diem, and that's fine. Then you just pay them that $10.50 a week, like we talked about in the example, and you're done. Never lose a driver over that. Some drivers will tell you that they're retiring soon and they want to bump up their Social Security. It'll change it a little bit. It's a bad investment. It's bad math, but I'm not going to argue math on this with a driver that doesn't want to get per diem. I'll explain to them that that's not really, it does work that way, but the relationship isn't enough that it's good for you. But if they're like, nope, this is what I want to do, all right, no worries, no per diem. And then sometimes if they're trying to get a loan and the bank doesn't understand or their lender doesn't understand how we're paying them, we've had clients who've had that happen with trying to get a mortgage. We sent a letter to to our client who they could forward to the mortgage people explaining how they got paid, and I'm pretty sure the people got the mortgage, or at least that wasn't the issue. Again, if they don't want to deal with it, that's fine. The other part I would tell them too is that if you need every last dime to get that car loan or that house loan, maybe you're overextended. But again, that's not something I'm going to tell a driver, because that's just going to win an argument and lose a driver. We never want to lose a driver over this thing. It's not worth it, even though the savings. If we've been talking about driver recruiting already, let's not have to recruit one more because we won an argument about per diem. How to optimize the advantages of per diem. This is a big deal, and I've got clients that don't do it this way. We'll do it however they want to do it, but per diem is Latin for per day. So the IRS allows, in that revenue procedure that I referred to earlier, they allow $66 a day. They tell you you can pay it by the mile if you want, or you can pay it as percentage, but it cannot exceed $66 per day. What happens is if you exceed the $66 a day, the additional amount needs to be taxable like wage. So, and your insurance, your work comp insurance won't give you more than $66 a day anyway. So you're really just pulling the money out and putting it right back where it was. So that doesn't do anything. And if you're paying by the mile or percentage and it's below $66 a day, then you're leaving money on the table. That savings that I was going through earlier, that gets washed out because you're not paying $66 a day. You're paying 52 or something like that. That was an old rate, that you just lost about a fifth of the benefit for you and for the driver of paying per diem. So we always recommend that everyone pays $66 per day and just report number of days. Like for our clients, they can just tell us basically what I put in the example, 2,500 miles and the driver was out 5 days. And that's fine, and we'll take it from there. But you don't want to end up being out of compliance with the IRS for paying too much, and you don't want to be cutting your savings from paying too little as per diem. And that's why we suggest $66 a day. You'll end up right on the number every time. Some companies we've come across too that they pay it by the mile or percentage because their software tells them they have to do it. That's fixable. And for this kind of money, I think you can fix it. With 25 drivers, I'm sure you can fix it. And even the per diem side, you just report it to us. Don't even put per diem. What we tell people is don't even put per diem into if it's your TMS or something like that, just give it to us on the side and we'll put it in after the fact. And your reports will still be good on the per diem, because all we're doing with per diem anyway is taking it out before tax and giving it back to them after tax. So your expense is still the same. Hopefully if that kind of makes sense there. But yeah, you really want to get past every obstacle to pay that full $66 a day, because it's nice when you're doing the recruiting too to say we pay you as much as is legally allowed. We're not just paying you what we feel like we can pay you or what our software limits us to. We're paying you as much as we can. So I think that's a big deal, and that really goes to a cultural thing for your company about are you there for the driver? Don't let your operating software get in the way. We're almost out of time. We have time for questions. Before Brandon gets to those, I'll point out we've got some links here for you. We've got trucking payroll tips. All of our webinars go there. We record them all. They all go there. You can watch them anytime. They also go to our YouTube channel. I want to highlight that one because we've got this long, silly address part here. We're going to send you a copy of this too, even though I just kind of crossed it out. If we can get enough subscribers, our channel gets to be named and I can make it not that horrible thing. So if you please go subscribe to the YouTube channel for us, that can be your payment for the free webinar. And then I also want to talk about Ascend here for just a quick second. Ascend and I are working on a big project. We can't announce it yet. It's coming. You'll hear about it in the next month, but it's going to be awesome. So if you're looking at TMS, you might want to look at these guys, especially if you're clients of ours or you want it. There's going to be good things coming. I don't want to give it away, but it's coming soon, and we're really excited about it. So with that, Brandon, do we have any questions?
We have one question, but I did kind of want to touch. I totally agree with you on the Ascend TMS. Let's definitely keep an eye out for that. There's going to be some big things coming in the future. But one thing I did want to talk about is if you have any questions in regards to per diem and you want to see a kind of like a packet on it, if you're trying to convince the powers that be that this is a good policy, reach out to me or to Mike. We have a whole packet that we can present to you. It'll be customized with your logo and your company information in it as well. We can break down the number of drivers that you have, your work comp policy in terms of percentage, and we can show you the numbers and how those can help you and your trucking company. I just wanted to get that out there.
Yeah, that's awesome. Thank you for reminding everybody of that.
Yep, no problem. So let me okay, looks like a couple more have come in. A question has come up a few times is if the driver, if they're not paying as much into Social Security, it sounds like it may affect their benefit once they go to collect retirement. Technically, they did earn the wages, so it sounds like it's a trade-off between more money now versus when they go to collect retirement. Is that correct?
Yes, in a manner of speaking, they're if you pay per diem to the driver, they will have paid less Social Security tax in, and that will make their payout smaller. Most, again, I don't want to speak for people in the financial planning profession, but most of them will tell you Social Security is a really bad investment. Take my advice to those people would be, if they're willing to hear it, to the drive, this is the drivers we're talking about, if they're willing to hear it, I would tell them to take half of the $80 savings and put it into an IRA or something like that, put it into some sort of retirement fund. You're going to come out way farther ahead. And they can talk to their financial advisor about it to vet that out, because that's, me telling them that's, I don't have a dog in the fight with them, but their financial planner should be able to walk them right through it. So yes, they are right. Their Social Security payout will be a little bit smaller, but because it's all a big Social Security formula. But the more money, if they took the money they're saving now and even put half of it away, they're going to come out way ahead. And hopefully that answers your question.
Can you do a future call about the differences in paying drivers by the hour versus by the load, ton, or miles?
Yeah, and it looks like it continues into the next one too. I found a way to get the question out, particularly about how it
Yep.
interacts with state minimum
Yes,
wage
correct.
calculations. Yeah,
Yep.
we first of all, thank you for suggesting another topic. We always look for topics for webinars. Yeah, we can do that. What another thing we can do is we can reach out to you offline and we can talk about it as well. Generally speaking, if you're an interstate trucking company, the minimum wage stuff is, yeah, you still have minimum wage to deal with, but you don't have overtime, and hopefully you're still paying them over whatever the state minimum wage is. But yeah, we can definitely talk about that. And thank you for suggesting another webinar. Anybody else has webinar suggestions for us? Reach out to us. We're happy to do those. We've got one penciled in for November 10 for about driver recruiting, because so many people, when they responded back to this webinar, said we're going to need to hire more drivers. And I think with everybody looking for drivers, it's going to be tricky. And so we've got some ideas for you that we'll share with you next month.
Let's see. Do you see any others that you want to address?
Yeah, yeah. There's one for companies with 2 to 3 drivers and 2 trucks. Can
Yep.
you
Oh,
pay
yes, I missed one.
pay the drivers as contractors? Not legally. Uh, the assuming the 2 trucks are owned by the trucking company and you're just paying them cents per mile, for example. No, we've done webinars on this before too, about contractor versus employee. And because the trucking company are bearing the risk, like for example, the truck breaks down, hopefully this doesn't happen to you, but the motor blows up, $17,000 fix, right? That's on you, that's not on the driver. And so you, that's one of the big qualifications: who supplies the equipment, who directs the work. And directing the work isn't just telling them exactly which road to take. If you're telling them to pick up a load in Chicago and deliver in Dallas, that's directing the work. Whether they take 55 or 57 down to get over to 35 or however they want to do it, that doesn't matter. It's your equipment, you bear the risk of profit and loss, and you direct the work. And they can only work for you, but that's a DOT rule, because you can't work for 2 trucking companies as a driver, really, not easily at the same time. But yeah, you can't do it legally. There's so much risk in that. I'll give you 2 quick examples. One of the examples is the driver gets in an accident, that they're going to get brought to the hospital, and the first thing the hospital is going to ask them is, who do you work for? Because they know it's a work comp claim, and the hospitals get to bill out at full rack rate on work comp claims instead of the discounted amount that your insurance company negotiated for health insurance. So they're always asking that. So that, right there, then you're going to have a work comp problem, because you don't have work comp on a contractor generally. So the other part is, say the driver just doesn't work out, and none of us want to fire a driver because drivers are hard to find, but this driver is just so bad you got to do it, and you let him go, and he files for unemployment. And you go, well, no, he signed a contract. He was a contractor. No, he still got rights, even though he signed a contract with you that says he's a contractor. He's still an employee, and he still has rights. And now you've got this, whatever state you're in, is now in your business to make that determination, it's not going to go your way. I'll just tell you, every state government I've talked to is looking for money, and this is one of the ways they're going to get it. So I would not pay them as contractors. I can't stress it enough. And in the nicest way that I say this, if you can't afford to pay them as W-2s, then you can't afford to be having people drive your trucks. Then your rates aren't enough, or there's other places where you've got a problem. So yeah, that again, there's a longer story to that, and we'll talk to anybody about that. Okay, let's see here. I got
I
a
got
note
one.
here
Oh,
from Tim at Ascend TMS, our sponsor today, and he wanted everybody to know to get the special 3 months free. You to create a Ascend TMS account at www.thefreetms.com, and then email proof that you're a client of ours. Um, if you're one of our clients and you're looking at doing this, we can help you with a proof too. And then they take care of the rest of it. And again, we got a big announcement coming next month that we're super excited about. And we got like 6 more questions. It's awesome.
I know, it's great. One of the questions that I was gonna say is, um, this is one we get a lot, and I'd love to have you kind of really dive into this. Is there a certain number of hours the driver has to be out for it to count as a day for per diem purposes?
That is an awesome question. And any of you who have looked at how the government uses general laws and applies them to trucking knows that they aren't really good about these things. Uh, even the things like give you an example, the payroll protection, the loans that people were getting, and now you're trying to get them forgiven, and they ask for a number of hours. We don't track hours for drivers, so yeah, no one does it, and they certainly don't pay off. Well, not no one, most don't. Of course, I shouldn't say no one, but so none of these rules are written for trucking. Even things like this one, as the certain number of hours. This is a great question. I will tell you what the requirements are from the IRS. There are 2 requirements. Number 1 is you must be subject to DOT hours of service regulations. The driver must be. That doesn't even mean you have to log, because within the 150 mile, I don't keep up super much on the DOT laws, that there are other great people who can do that. But if you're within the 150-mile radius, you don't have to log, was always the rule when I worked at a trucking company. But they're still subject to DOT hours of service regulations. They can't drive 27 straight hours. So they would still count. And you must be in multiple meals and incidental markets. I'm going to see if I can find that list. The IRS lists the meals and incidental markets. If you are east of the Mississippi, I don't think you can drive 50 miles without being in multiple markets. Well, you get out into the prairie, yeah, okay, maybe. But there's a ton of meals and incidental markets. So we like to tell people, to get back to your question, we like to tell people they're gone overnight. That is the safest way to do it. I have seen clients who do it if the driver's gone 12 hours in a day, because they can't stop for meals. And that's the whole point of the per diem anyway, is that you reimburse them for meals because they can't stop anywhere and eat because they're on the clock. And so that I've seen other people use different things. The only time I've seen per diem get denied by the IRS was a courier who was just pedaling around a city, one city. That's the only time. And they actually had minimum wage problems. There were a host of other things, but that was the only thing there. Let's see here. Yeah, we've got.
So I've got another one that kind of
Yeah,
ties into what. So if the driver returns home each night, he cannot earn per diem. He only if he stays out at night.
that is the safest way. Again, it's not well defined. If a driver left at 4 in the morning to go pick up and got home at 7 at night, I would be comfortable with trying to pay per diem. I've not seen legal precedent one way or the other on it. The driver would be gone for 15 hours in the day with a break in the middle or something like that. That driver can't stop and just go to McDonald's and eat lunch, even forgetting about where to park the truck. There's the time constraints and all that kind of stuff. So it would be dicey. Now, if a driver goes to work at 8 in the morning and is home at 4:30, then I don't think you'd pay him per diem. But with if the driver's really basically only almost like they work third shift and it's like they really are gone overnight, then I would, I would definitely be comfortable about that. And to the person who asked the question, if you want to talk to us about specifics, we're happy to get into specifics with you about it.
Yeah, definitely.
And then, those are great questions too. So I'm glad people are asking them.
This one ties in. I don't know if you want to answer this one or you want me to answer this one, but what separates your company from big payroll companies like Paychex?
Okay, ask her a question. You're awesome, by the way. I appreciate you. I appreciate you teeing that up for us. Brandon, either one of us can answer it, but really what it comes down to are two things. Number one, we're a specialty shop, and that means that all we do is trucking. That's it. The only other people that we do that are not trucking are like my attorney. We do his payroll because he knows me. We do nothing to try and get, we're not trying to get the doctor's offices and the restaurants and those guys. Half the people that work here worked for trucking companies. It's in our, you kind of become a lifer, right? If you're in trucking, you just kind of start living it. And then also, yeah, it's our trucking focus. Our webinars that we do are about trucking and about saving you money. The mission of our company, and you could call anybody here and ask them this, and they better answer right. Our mission is to help trucking families. That is what we do. The families of the owners, the families of the drivers, the families of the office people. We want them all to have better lives as much as we can affect it through things like payroll. So that's the biggest thing. You're not going to have to teach us about trucking. And I'm not they used Paychex in the example. I don't have an issue with
Correct.
Paychex. I don't, for the doctor's offices and the restaurants, they're great. They're fine. But you're going to have to explain to them what a lumper is if you want us to reimburse, if you want to get reimbursed for it. And we know it's not wage. We know what a lumper is. You're going to have to explain what detention is. They're going to think that you put the kid to the principal for an hour. No, we know what detention is. We know all that stuff. You don't have to explain it to us. And we know that sometimes you're going to call us and say, hey, can I do my payroll just a little bit later because I'm missing some bills? And we know that bills are bills of lading, proof of delivery, that obviously the things you pay the driver from. We get all that. Everything we do is trucking focused. We are a square peg for a square hole. Brandon could probably answer it very similarly. And to the person that asked, Brandon, you should talk to Brandon about it. And he can give you another great answer as well.
One thing that I would add to that is how custom we can make your payroll to your specific needs and wants for your trucking company. Things like a customized pay stub that can be essentially a trip sheet and a pay stub all in one, increasing the transparency between your driver and you, to help build that trust that Mike referred to earlier in the webinar.
Yeah, absolutely. Showing your work, the transparency builds trust between you and the driver, because if you've ever talked to a driver, you've heard stories about how their previous trucking company stuck it to them. And we want to help minimize that. We want to help you keep drivers. Obviously, it's in our own best interest if you have more drivers, if you're a client of ours, because then you're bigger client. So, but we do it more for you. We want, trucking's hard. I worked for a trucking company for 10 years, and that's a hard way to make a living. And you guys keep going at it, and the government keeps making it harder for you over the years, and your rates haven't gone up, even net of inflation in actual dollars, other than fuel surcharge, since deregulation. And let's make this easier for you. And that's what we want to do. You've got enough other things to worry about. We'll help you with this. And I think that's it for the questions. I see one more I'll answer really quickly. Do you have information on how to explain per diem to our owner operators? Your owner operators would take it on their Schedule C because they're self-employed, or assuming they're self-employed, if they're a corporation, they would take it that way. An owner operator at Schedule C would take it right on their, or that would take it right on the Schedule C. An owner operator who's a corporation and pays themselves a wage would pay themselves just like we're talking about here. They need to get with somebody who can do payroll. We know people, obviously. So, that we'd be happy to help them walk through it, so they can reach out to us. But really, they should talk to their tax advisor, and they should have a trucking tax advisor. We can make referrals on that too. We're big fans of everything trucking. Like your insurance agent should be a trucking insurance agent. Your your tax person should be a trucking tax person. All those kinds of things. So, and if you need referrals for any of that, we're connected. So we'll help. We'd be happy to hook you up. And with that, I'm sorry I went over the time. We got rolling a little bit. So I made my half an hour webinar 45 minutes, which I don't usually like doing because I want to respect your time. At the same time, you all have the ability to ditch me anyway. So I hope you found this to be informative. Again, I'm looking at November 10 for the next one, but I didn't put a slide in for it because I'm not committed yet. And it's going to be on driver recruiting and how to recruit more effectively without just burning money at it. how many drivers do you need to save to make it worthwhile, half an hour of your time? We look forward to talking to you again. Thank you so much for attending. Again, check out all these, go subscribe to our YouTube channel. We'd really like that. And then check out Ascend TMS there. It's a great piece of software. You can get it, you can do it sitting by the beach if you want. So with that, we're going to end the webinar. We thank everybody for joining and have a great rest of your day.
Thank you, everyone.